I think you can accuse the public markets of being many things, but patient has never been one of them. And this is definitely the week to feel it. Um, I agree with you. I think the Google earnings were very positive. Obviously, the top line was, but if you look under the hood, there's so many interesting data points. Gemini Enterprise launched 4 months ago, and they've already sold 8 million paid seats. They signed more deals, more than $1 billion this year than the prior 3 years combined. The stat that really stuck with me is that their AI customers use about 2 times more Google products than non AI customers. So search is accelerating, cloud is accelerating. This is clearly a business that has a lot of tailwinds behind its back, that's really regained the AI narrative. It's just all of these big tech companies are in this sort of damned if you do and damned if you don't situation. If they don't spend on capex, they're going to be seeding market at a very crucial moment in this transition to their competitors that are definitely not going to slow down. So it's a prisoner's dilemma sort of thing. And from the public market perspective, if you believe that we're seeing a paradigm shift, which given how investors are trading SaaS stocks these days, clearly they do, then if you don't invest to meet this future, that's negligence. That's not prudence. Being early and wrong here can cost you money, but being late and wrong can cost you the company. So I think I'm positive on what Google and Microsoft are doing to set themselves up for the future. And I think once these quarterly issues are over, we'll be back on plan, hopefully.
So if I hear you correctly, basically what you're saying is, and loosely, the stock market doesn't make any sense. I mean, that's known to just about everybody in some ways. But you're saying what we're seeing with the drawdown in enterprise software stocks, that is the fear of AI. And here you have companies like Google that are very clearly investing in that same AI, similar to what Microsoft did last week. And you have opposite reactions, which is not making a whole lot of sense to you.
Yeah, these companies are extremely well placed to capitalize on this trend, and they're putting the money behind it. And it's not ahead of demand. The demand is here. What's
Right.
also very interesting is that the cost of serving is going down a lot. So the unit economics on this spend are getting better with time. Sundar mentioned that I think the serving costs are down 78% per unit of intelligence. So I think the economics will catch up and get there, but patience needed in the interim seems to be severely lacking in the market at this point.
Right. What about the TPU story here? That was not as much a focus in this quarter as it was in prior quarters on the call. I think they did talk about it as being one reason why we saw that tremendous growth in Google Cloud and a big value proposition. But the answer that executives gave to the question around the long-term strategy around using TPUs outside of Google Cloud, outside of the company, we didn't get a lot of clarity there. What did you think of that?
I think they maybe just didn't talk about it on the call, but in the ecosystem, we hear a lot of great things about the performance that TPUs give and the fact that they seem to be stepping out of just Google Cloud and selling it to the neo clouds, and people are, beginning to use it and really like it. I think Anthropic obviously is the case study of having used TPUs and really benefited from it. So I think TPUs will continue to be a very big part of the Google story, and we'll continue to hear a lot about it.
So if everything is going right here for Google, and it seems like a lot is going right for the company, what do you think are the big risks now facing the company going forward?
I mean, the thing is, AI is a marathon and the laps are very short. So I think the sentiment shifts like a pendulum every few weeks, where for any given company, we go from like, it's so over to we're so back. Like right now, OpenAI and Microsoft are in the doghouse. Anthropic and Google seem to be doing really well. I think we're one model drop or one product launch away from that shifting. So I think it's too early to call it. Consumers are trying a bunch of things. Their interests are fickle right now. I think everyone just needs to keep their head down, execute. The dust is going to take a while to settle. Um, So I think the biggest risk to Google is that their next few models don't land, and OpenAI again regains the narrative momentum and the customer interest. So it's no one's game yet. Every leadership position is borrowed, and we'll see how things shake out. But I think Google and Microsoft, the reason I'm very positive on these big tech companies is one, they're moving aggressively, but two, they have established data advantages, they have distribution advantages. And in a world where you think software is going to become easier than ever to create, distribution is going to become ever more important because I'm already seeing this in enterprise buying right now. Vendor fatigue is very real. You have 5 companies that are selling you very similar sounding things. Unless it's a step change function, you default back to whoever your existing vendor is and ask them, hey, what are you doing with regards to AI?
Right.
So I think, yeah, a lot of roads lead back to the incumbent.
And this is something that you wrote in your newsletter recapping the Microsoft earnings as well. You wrote here that the market is underweighting the application layer where Microsoft has a right to win. The point you're making there is that where people have that user base already and have those applications installed, that will really give them a leg up with future applications.
Yeah, I agree. I think incumbency has always had an advantage if you don't fumble the bag. And I think distribution matters even more now in a world where software is easier to create. And
Right.
these incumbents are being extremely aggressive. So that's not something I'm very worried about, particularly for big tech.
So let me ask you about the broader SaaS apocalypse now at large that we are seeing, because it's not just these hyperscalers that are on a walking a tight leash. It's really everybody. Look, we know the narrative here. Will AI replace software? That's the narrative that people have seem to have suggested is bringing the market down. My question for you is really, is this fundamentally a new normal with respect to what the median multiple for what a software company is? I mean, at various points in history, I mean, look, when Snowflake went public, right? I mean, there was a multiple normal then. It seems to have come down. It's coming down more. I don't know. I'm sort of starting to think that in a world where these AI companies will go public, maybe in the next 2 to 3 years, is this making space for what people deem to be a higher multiple company, and an old school SaaS company maybe isn't worth what it was, a couple years ago.
I think right now the market is trading fear, not reality. Reality will diverge and we'll see the SaaS scam sort into winners and losers. And then there will be a re-rating of multiples in both directions. But I think right now it's too early to tell. Again, I go back to you can't underestimate distribution and data as advantages. And yes, some people in the SaaS complex will ship a bad copilot on a 2015 architecture and call it their AI strategy, and they're not going to do well. But some people are going to move aggressively and foundationally change the product, and they will be in a very prime spot to kind of retain that customer interest. So I think we're overreacting right now.
Mhm.
This is a fear-based reaction, and that's not to say that there won't be losers and there won't be winners, but I think once that becomes clear, you diverge into those camps. I think this feels temporary. I
Right,
hope
right.
it is.
Great. Well, Sonia, I want to thank you for coming on the show. That is Sonia Ojha, a partner at Bain Capital Ventures here on TITV.